Good morning from Chicago, traders. It is 8:12 a.m. Central Time, June 10th, 2014. Welcome to another Tuesday. Thanks for joining me as always. Trading futures, options on futures and foreign currency involves substantial risk of loss. It is not suitable for all investors. Let me turn down my news feed. It's too loud. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. In other words, do your own homework. Don't take things anyone tells you in this business on faith alone, as you already are smart enough to know that. Looking at the overnight session, there's a fair bit of news. UK April industrial production in line. Norway May CPI higher. ECB's Weidemann is defending the ECB's new policies, but notes they involve risks, including negative surprises in prices. That doesn't sound very confidence-inspiring. Bank of England's McCafferty, leaning hawk. Time for first hike is approaching, but economy can grow more first. Decision on rate hikes now more balanced. China May CPI, small beat, came in at 2.5 versus 2.4 consensus. For those of you who trade energies, crude oil, Saudi Arabia likely to increase production in the second half of this year. May production was up 35,000 barrels per day. Citi noting that the core EU bonds continue to witness significant selling with 4-week demand at its lowest in a year. That's pretty interesting to know that. Bunds remain under pressure, and the peripheral bond yields, which are the countries other than Germany basically, peripheral bond yields are wider as market participants book profits on those instruments. UBS analysts believe that reserve managers may sell the euro to avoid paying penalties after the ECB cut deposit rates to negative. So, I mean, with a negative deposit rate, essentially what you have to do is, instead of get paid, collect interest on those funds. Now you have to pay out. So that may be continuing to put pressure on the euro as well as intended. U.S. NFIB small business optimism came in at 96.6 versus 95.8. Nice to see that small businesses are more optimistic than expected. And then looking ahead at the economic releases for today, U.S. JOLTS comes in at 9 a.m. Central today, expecting 4.075 million jobs. Also at the same time, 9 o'clock, U.S. wholesale inventories at 0.5%, wholesale trade at 0.9%. Also at 9, ECB's Mersch is expected to speak in an economic forum in Brussels. And then at 10:30, we have U.S. 4-week bills expected at 35 billion. And then at noon Central, 3-year note auction for 28 billion. Let's take a quick look at the charts and do what we always do, which is to answer the question, what have we done, so we can figure out what we're trying to do and how good of a job and what is likely to happen next. That is, those are the contextual questions we seek to answer every day, basically, and base our plan on it. Now, I want to remind everyone that I'm not here to give you setups or to tell you what to do with your trading account. These are not trade recommendations, you already know. I'm simply going over my view, and it's all opinion, my view on the markets, and to share with you as openly as possible what plans may play out in the day. And my approach to trading, and I just don't see any other approach unless you're a systematic computer trader. My approach is to figure out what is likely to play out, come up with multiple hypotheses, kind of like a lab technician coming up with a hypothesis and then going into the lab to prove it right or wrong. And so I come up with these hypotheses, try to cover with you, I try to cover basically the most probable, or the first 2 or 3 most probable hypotheses, and then essentially what I do for the rest of the day is just wait and see what the market yields. It's kind of like looking at a battle plan and trying to figure out if you're going to be flanked, if based on the intelligence you gather, what might the other side do, and then figure out what you'll do in those situations. And so as soon as the battlefield feedback materializes, we're not sitting there trying to figure out what to do about it. We already have a plan in place, and once we have a plan in place, we just execute that plan with defined risk, and that's the goal here. So the whole thing is based on understanding and keeping a tight grip on context and understanding what the market is trying to do. If we understand what the market's trying to do, and we're using the auction perspective, because this is what this is, it's just a massive auction. That's what the market is. Prices being bid up or down to advertise higher prices to bring in sellers, lower prices to bring in buyers. That's what the market's function is. No, it's not here to find and trigger your stops every day. That is not the goal of the market. That's just theory and so on. But the market's here to discover what the heaviest participants see as fair pricing, and we represent that with these volume profiles. We see where they participated, where all of our competitors participated, where prices were not accepted, and then we base our decisions on that. That's just a summary that I run through every once in a while as I see more and more participants coming in. Yesterday we opened right in Friday's value. Okay, the expectation was to either test up to 48 and look for failure. That's primary hypothesis, is test up to 48, look for failure, then failure would likely take us to 45, or still primary hypothesis, test lower early to 45, look for buyers, and then look for new highs. Either one. What it did instead is it opened, it tested down very quickly. It stopped a tick short of the point of control here, the volume point of control, shortened as VPOC. It stopped a tick short, and then it went right to Friday's high for a test, pull back, and then it started to make weaker and weaker highs, meaning the market kept pushing up against the high with building a ledge or a volume there, which is a high probability break higher when that happens. A weak high is something that is not likely to be sustainable for the session, and generally are broken by a tick or better. So that's what it did, and then it pushed to 51.25, pulled back to the mid, more chop at the mid. Then finally we get the push to 54.75, and then immediately get sellers. This is not a weak high. This is what I would call a decent or secure high. This may not be the same definition as those folks who use market profile, but even in the market profile we have a 3 TPO high. It's a fairly decent high there, and so I called it out on Twitter when it happened. And then we got immediately 5.25 point rotation before a 6 tick pullback to the mid and VWAP. The mid is the dark blue line, or the blue line. VWAP is the cyan line. Mid is basically the high and the low of the session divided by 2. That's the middle of the session, or the 50% fib, so to speak. So we pull back right back to that mid against the IB high, and then rotates and takes out the point of control, rests for a bit, tries again for the 45, could not get there, 45.75, stopped 3 ticks short, and then found buyers back to mid on the close, and then just rested basically into the close. Here's a retest of the developing value low. You can see the line right here, developing value low, and then it finished right at the point of control for the session. So the market essentially continued what it's been doing for the last so many sessions, probably 5 for months now. Tested higher, put in new highs, but this time it did not put in a new high on a weak high, which is what we've done. See this right here? We put in a high and we just rest up against it. We generally put in weak highs right at the high. Here we go again. We're closing right near the highs. This is not essentially a weak high, but we have a ledge here, and as we go back in time and look at these days, we've been doing that over and over and over. So here's another day where the market closes at high and puts in a weak high. Here's another day, closes at high with a weak high, on and on and on and on. Yesterday was different. And I outlined that. I'm not sure if I outlined it on Twitter or in the Stage 5 chat room, but I said, look out, this is different. This is slightly different. The expectation with this weak low here is to push lower. Remember, the primary hypothesis for the day is 48 or 45 tested at some point in the day, and here we are overnight. We went to 44.75, just pushed through by a tick. To close again right at the point of control. So this is interesting. We did get to the 1950, which is another psychological option strike number, and we're here, and we're trading at 1946.75. So it's nice to see a little bit of a change over the prior days. Something different to work with. Here we are again. So you could see here a demonstration of how things have been as far back as you want to go. So right back here, there's a terribly weak high into the close. The market closing right up against the high. The market closing in the upper section, but here it's closing in value. Market's closing near highs, pushing the high. Market closing near high, even though it's an inside day. Market rejecting lower prices, one ticks the low, and then just pushes right back up into the high. Very bullish. Again, Wednesday, very bullish. Weak high. Thursday, big rally. Very poor structure down to 29.75. I'm looking forward to this once we get into this zone below 36.75, 36.50. So that's a key area that I'm outlining. And then closes near the top of the rally zone, very bullish. Next day gaps up, closes at highs, very bullish. But then here we're pulling off the high pretty strongly, as you can see in this rotation yesterday. So just from the interest of not just I'm not interested in being a bear or taking a biased view of the market. That I do what I can to avoid that. Out of interest of just receiving better trading opportunities or more trading opportunities, I'm excited about this. As poor as it is, I'm excited that this may start to push out the weak longs and bring us back into this 38 zone and then below 36.50 for a quick test to 29.75. That would create an opportunity for day trading. Obviously not great for anybody who's swinging long. Okay, so a quick look at the overnight session. Here we are. Market drifting down as expected, pushing down through that 45 from prior Friday, Friday's value low by a tick, and holding a distribution lower here, and doing most of its trading at the lower end of the profile. Here we are at the point of control is lower than the prior night's point of control. Not that that's significant since it's the overnight session, but it's nice to see that. I'm going to keep an eye at 48. On 48, again, 48's in play from Friday's value high. So I'm looking at 48 as the over/under for the morning, and that's what I want to see a test again. So this morning, the expectation is for the market to sit here. We're opening in about 3 minutes, 4 minutes. The expectation, my primary hypothesis, is for the market to immediately find buyers as it has from the prior sessions. We're still in a long, intermediate, and short-term bull market, and there's nothing here. There's no price action or value-based change in the trend. So I'm looking for buyers to step right in this morning. What I'd like to see failure at 48, 48.50, rotation down, take out the overnight low, and then start targeting 38, 36.50, and then 29.75. What we're likely to see, though, is a quick test higher, pullback, chop, and then a continued drift higher is what's more likely given the way this market is traded so far. But I am, and you should be, prepared for anything that could happen. But these are the targets. Now, the targets below. Targets high, measured move targets. I still have 59.75. We hit 54.75 on the nose yesterday, right here, 54.75. That comes from this rotation right here. I have 59.75 above, and then from there I have 74.50. The current structure is very poor for measured moves, so I have nothing in between 59.75 to 74.50. There hasn't been enough pullbacks to create anything. I'm going to leave you with that. I know this is a bit rushed. There's no, I don't see any additional headline risk, and my closing comment is going to be the same as always. Have a plan for all the eventualities or the possibilities the market could throw at us, and then stick to your limits. Stick to your limits. I'm watching people hold on to positions from 1880, 1890, all the way up in here and just giving away their entire account. And I can't push them out, but it's just really important not to throw away your funds, to protect your funds when the market's not clear to you. Just stand by, be patient. Good luck.